So, markets couldn't quite catch a break yesterday. After weeks of record-setting highs, Wall Street finally pulled back a bit on Thursday. Hey everyone, it's Friday morning, September 26th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. The Dow dropped about 0.4%, the Standard & Poor's 500 lost roughly 0.5%, and the Nasdaq also slid about 0.5%. Big tech didn't help the mood, with Oracle adding to its recent slide and Tesla down more than 4%. Now, what's really behind this? Well, a couple of mixed signals are keeping traders on edge. First, jobless claims came in lower than expected. Only 218,000 Americans filed for unemployment last week, compared to 232,000 the week before. That sounds like a strong labor market, right? But here's the catch. Stronger jobs data makes it harder for the Fed to justify aggressive rate cuts. Then, there's the GDP number. The second quarter showed a rebound, with growth clocking in at 3.8%, way above the expected 3.3%. That's a sharp turnaround from the first quarter's decline. Great for the economy, but again, it complicates the case for cutting rates. So, traders are basically caught between solid growth and sticky inflation, with the Fed showing signs of division. That makes today's big release, the Personal Consumption Expenditures Index, the Fed's favorite inflation gauge, all the more important. And on the corporate side, all eyes are on Costco. The company reported after the bell, and investors want to see if shoppers are still chasing deals in this uncertain economy. It looks like the company did not disappoint. So yeah, another choppy day, with investors waiting for the next big clue from inflation data. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.